Are you one of those people who is afraid of investing in the stock market because it looks so daunting? Well, you're not alone. A lot of people actually experience this because when you look at those green and red candle looking things and also those different kinds of lines staring at you, it does admittedly look quite sophisticated. But in reality, trading or investing stocks is simple. Let me give you guys an analogy that would make things easier for you to understand. So, the stock market is just like any other market, right? What do people do in the markets? They buy and sell goods. There is an exchange of goods happening. But in the stock market, instead of fruits and vegetables or different kinds of products, you are trading shares of a company. Okay? Shares of a company. So now let's go back to the market analogy. Let's imagine that you are currently shopping for an electronic gadget in Amazon, right? So, how do you usually buy items online? So, of course, you have to first search for the item you're looking for. So, in this case, it's the electronic device, right? And in your feed, of course, you are met with a lot of options, right? So, for example, there's option 1 here, there's option 2, there's option 3, and of course, they all come from different sellers. So, seller A, seller B, and seller C. So, in the stock market, these are the different companies, right? Like company A, company B, company C. And they're not necessarily selling the same type of electronic device. So perhaps one of their electronic devices in the market is priced at, say, for example, $100, some maybe 200, and maybe this one is around, let's say, $60, right? All of them have different price points. And this may be attributed to perhaps the quality of the product. Maybe company C or seller C is selling the product towards the masses, right? While seller B is selling the device towards more affluent people. Same goes in the stock market. So stocks are priced at different price points. Some stocks, so let me just write this down. Some stocks may be selling at $3 a share. Another stock may be trading at $10 a share. And another stock may be trading at $200 a share. So they have different price points. And now let's look at another factor in the e-commerce where it's similar to the stock market, and that is the ratings, right? So what do you do while searching for an electronic device that you want to buy? Obviously, you have to do your research, right? You compare the electronic device to its competitors, right? So, say for example, you are interested in purchasing a an electronic device that is priced at $100, but you want to look for electronic devices that are also priced at the same price, more or less the same price, right? So, for example, um, electronic device 1 is priced at $100, it's being sold by person A. Then you also found another similar price point for almost a similar type of electronic device, which is priced at, let's say, $90 or $90.5. Now, after seeing a similar electronic device priced relatively in the same range as what you're looking for, now you look at the ratings, right? So for seller A, you saw that there are 300 people who rated it at 5 stars, right? And then perhaps 100 people rated it at 4 stars, and only a handful of people rated it 2 stars, right? Then for seller B, you saw that there are 200 people who rated it 5 stars, 100 people rated it 4 stars, but around 30 people rated it 3 stars. So which among the items would you buy? Obviously, from seller A, because there are more 5-star reviews. And similar to the stock market, you also have to do your research. Say, for example, you are interested in buying a tech company. Okay? Perhaps the semiconductor industry, since that's the one of the industries that's currently hot right now because of AI, right? So you look at company A, which is trading at $200, and you look at company B, which is trading at, let's say, $170, right? And to do your research, you have to look at the financial statements of the company. Okay? So the financial statements allows you to look at the snapshot of a company's performance through its income statement, balance sheet, and cash flow statements, right? So that is how you do your research or due diligence on companies that you are interested in buying in the stock market. Now, how about those complex looking candles that I mentioned earlier, right? So the candlestick represents the price in the stock market, although it does not necessarily appear in, like Amazon, right? This is unique to the stock market, but an easy way to put it is that when you look at these different fluctuations in price, it just basically shows the changes in supply and demand, right? When you see that that the candlestick is green, it basically means that people are optimistic about the the company. Like they want to keep buying the company's stock. Whereas when you see a red candlestick, that means people are selling. It's as simple as that. However, there's also another important factor that I want to introduce to you, which is volume, which is essentially the number of shares being traded in a particular day. Say, for example, the volume that was being traded for day one was around, say, 1 million shares. Then on day two, people were selling, right? Perhaps there were only 500,000 shares being traded. Then on the third day, perhaps there's not much activity going on in the market. So, say around 300,000 shares are being traded. So, the volume, basically, using the same analogy we used earlier, it shows the number of orders being placed by people online. So, say for example, we have the electronic device that we chose earlier, right? And then we can see, right, that it displays the number of orders that the seller accommodated, right? So, say for example, there were 4,000 devices being sold already. So, you can look at orders similarly to how volume works in the stock market. Those are the basic things that you need to take into consideration when trading or investing in stocks. So, again, just to summarize everything, so first we looked into what the stock market is. What is the stock market? So, the stock market is basically a market where assets are being bought or sold in a stock exchange. Okay? It's just like any other market where supply and demand dynamics are in play. Next, we looked into how do you select stocks. So, just like in online shopping, you look at stocks by comparing the stock you're interested in to its similar competitors, right? So we introduced it earlier by looking at its financial statements and I showed the parallel of it to looking at reviews for the product. Okay. And finally, I gave an introduction to price and volume, which may seem complicated at first, but in reality, it basically just shows the price that the stock is being traded at and also the number of buyers or sellers buying or selling the stock. So again, price is how much the stock is being traded at, and volume is basically the number of orders in a particular day. So that's it for this video. Thank you so much for watching, and if you're interested in learning more about myself and my journey in trading or investing, do feel free to click this video right here.